heard them giving advice for years on their nationally acclaimed radio show. You may be reading their regular prized financial newsletter. Anthony and Susan Cutia have over 30 years experience in the financial industry and are principals in the Cutia Mortgage Group in Boca Raton, Florida.
Well, good afternoon, everyone. This is Anthony Cutia, and I'm here with my wife and partner.
Susan Cutia, it's great to be here this afternoon, and certainly we have an interesting show planned for you, but I want to welcome our guest. Our guest is Bill Carey. Bill is a CFP, and he is with Wealth Preservation Group, and we're going to talk a little bit today about what you can anticipate in the form of annuities and what some of the parameters are if you want to know what to do with all of that equity that you're taking out of your home and how you can better utilize those monies to be working for you. So welcome, Bill.
Thank you very much. Thanks for having me.
All right, very good. Just move that a little closer to you. Okay, very good. All right. What we're going to talk a little bit today is we're going to talk about a couple of interesting things. We're going to talk about the asset protection feature of annuities, and we're also going to talk about how you can use annuities with real estate, and very interesting. And I'm also want to make a comparison between using an annuity and reverse mortgages, which is something which I find to be and it's unfortunate that they're as popular as they are, and I mean that. Many people are promoting these reverse mortgages, and quite frankly, I don't think that they're good at all. I think they're the worst instruments around. But then again, you know, it wouldn't be the first time that banks and the government comes out with things that are not exactly in the best interest of people. But we're going to make some comparisons and show how you can actually accumulate wealth and manage your wealth and how to plan. And that's really something that most people fail to do. They fail to plan. And I think we're going to get into this discussion. I think it's going to be quite interesting today.
But before we do that, we certainly want to give you our numbers. So if you have a question and you'd like to dial us up right here in the studio, whether that question is related to real estate or real estate financing, if it's for your own home, investment property, whether that be commercial or residential, you can call us right here in the studio. As well, we always like to take your questions. You can call us in our office, speak to a mortgage broker, a realtor at any point during the day. And that toll-free number for our office is 888-TALK-364. That's 888-TALK-364. So if you have a question as well for Bill Carey and you want to talk to him about some investment parameters for you, certainly you can dial us up as well right here today, and we'll take those questions.
We will be holding an open house at the Highland Beach Club up in Highland Beach. And one of the advantages of that particular property right now is that the property has changed hands. Some people have come in and they've bought the remaining units on this, and they have reduced the price on these units quite substantially. And the reason they were able to do this is it was an estate sale, so they were able to purchase this at good prices. And they're really giving these prices, you know, to new purchasers. So I think this is a real good opportunity. And we're going to talk about this.
This is a wonderful property. For those of you that are not familiar with the Highland Beach area, it is right along A1A, just north of Spanish River Boulevard.
We will be also selling units there. We are realtors, so we will be selling units there. So if you have any questions, you can call us here in the office at 888-TALK-364. That's 888-TALK-364. And we do have one property there that is kind of unique. And there are a number of properties that are rented right now. And one of the properties is a unit that the tenant is paying roughly $2,650. And they did the analysis on this particular property. And a person who would have A credit could essentially look at a return on investment of anywhere from 6 to 11%, depending on whether you put down 20% or we would put down 10%. Quite interesting. The less you put down, the higher your yield. So in that instance, this is a tenant that is in place. And if you're interested in this type of a property, And again, this is a property that overlooks the Intracoastal as well as the beach.
It's important to note that the property also, there are 2 towers with condominiums, and then there are also townhouses available. And the townhouses directly overlook the Intracoastal, and the condos, depending on location, overlook the Intracoastal as well as the beach, and you also have beach rights. And I think another important point is that it is a pet-friendly environment.
Right.
They have some wonderful amenities. They have a fabulous pool, spa. They have a health facility, massage room, and a wonderful clubhouse. So this is a unique property, and certainly we anticipate that these units will be going very quickly.
It's quite an area, and it's a magnificent property. So again, if you're interested in the Highland Beach Club, please call our office at 888-TALK-364. That's 888-TALK-364. We'll be happy to show you that property and go through some numbers for you. What I wanted to do now, you know, Bill, we were talking before we went on the air that one of the principal advantages of an annuity is asset protection. Explain to us what that really means.
Well, according to Regulation 222 in the state of Florida, actually, there are certain states that protect the assets of insurance products and annuities, and Florida is certainly one of them. And they protect the assets from any...
Now, not every state does this,
That's
right?
That's correct. Not every state does
Right,
it.
okay.
But in the state of Florida, and that's one of the reasons that this individual we discussed moved
Right.
from California to Florida, because it is recognized as one of those states.
Mm-hmm.
So from any lawsuits, from any creditors, that is protected.
Right. So in other words, anybody like that would have initials like OJ or something like that who moved to Florida might have, now my understanding is that they're collecting, or he's collecting, about $25,000 a month.
This is something I heard as well. Yes.
Right, I heard this.
Yes.
There's a rumor out there.
Well, it just goes to point to the fact that annuities are judgment-proof. Certainly, his particular situation demonstrates how far they might want to reach to be able to tap into your assets. And if he had that protection due to annuities, well, that's something that I think a lot of professionals, especially those in the medical industry, would be, or medical profession would be most interested in,
We know
having
there's
that protection.
Mm-hmm.
Exactly. We know there's a lot of people that wanted to go after some money there, and they were not successful because of that.
Right, definitely. So, I mean, that's an important factor, and that's something that you need to keep in mind when you are planning, when you're setting up a financial plan. Asset protection is very important. And again, we're not talking about people who are involved in situations like that, but, you know, things happen. You can get involved in an automobile accident, and, you know, it doesn't have to be deliberate. You can just be involved in a lawsuit, and all of a sudden, you know, someone gets a judgment for $10 million. What happens? Everything that you own essentially is subject to that judgment, with the exception of the annuities. So it's very important that even in a situation where you have your own home, people talk about the homestead. If you have a judgment against you, they can't force you to sell your property, but what can happen, the judgment still follows you. So at some point in the future, when you try to ultimately sell this property, let's assume people have no mortgage on a property and they ultimately sell the property, at some point that judgment would have to be satisfied. So it really is something to keep in mind. Very, very important when it comes to asset protection and the planning of asset protection.
I want to give out our number. If you have a question related to real estate or real estate financing and you'd like to give us a call, we'd love to take your questions.
At Cutia Mortgage Group in Boca Raton, Anthony and Susan Cutia and their 25-member professional staff take the time to educate you about your mortgage options. They believe a properly structured mortgage should be the cornerstone of any wealth creation strategy.
Anthony and Susan suggested that I use the option arm. This gave me the flexibility to to make decisions in terms of the mortgage payment that I was going to do at the end of the month.
I'm grateful to the Cutia Mortgage Group for opening my eyes to different mortgage vehicles, which has enabled me to lower my debt ratio and increase my cash flow.
Tune into our radio show, Talk About Mortgages, or catch us on PAX TV Sunday mornings at 10. Call the Cutia Mortgage Group toll-free at 888-TALK-364 or log on to our website, talkaboutmortgages.com, and receive a free newsletter or credit repair kit. Make an informed mortgage decision when purchasing your own home, commercial or investment property. Cutia Mortgage Group, revealing the path to ultimate wealth creation.
Hi, this is Anthony Cutia again, and we're here in unit number 205 at Palmetto Place. One of the features of this particular unit is this tremendous deck and the sliding glass doors. Every room here has one of the sliding glass doors, has a floor-to-ceiling sliding glass door, and it's really a tremendous feature. So if you're interested in this particular unit, you should call us, 888-TALK-364. That's 888-TALK-364. We're going to go inside and we're going to look at some of these individual units, and we're going to look at the kitchen area. We're here inside Unit 205 again at Palmetto Place, one of the premier addresses in Boca Raton. And we're in the kitchen area right now. And as you can see, we have the black granite tile on all of the countertops, and we have the stainless steel sinks. We have this upgraded kitchen and the appliances. And you'll see that we have, these are all the gold package, the Whirlpool gold package. Very, very nice. This particular unit is for rent right now. It's a 2-bedroom, 2-bath unit, and this unit is for rent right now at $2,550 a month. So if you're interested, call us in our office at 888-TALK-364. That's 888-TALK-364. Okay, we're in one of the bathrooms at Palmetto Place, in one of the 2-bedroom units. This particular bathroom has the Saturnia tile and has the tile countertops as well. All right, we're in one of the bedrooms at Palmetto Place, and as you can see, you have the tremendous closets, these very large closets, and these units that have carpeted flooring, and you can see that very, very nice carpeting in these particular units. If you're interested, just give us a call in our office at 888-TALK-364. That's 888-TALK-364, and this unit is for rent for $2,550. Anthony Cutia again, and we're here on the pool deck of Palmetto Place. What a beautiful pool deck this is. You can picture yourself just lounging around, just taking in the sun, just a tremendous area. I must tell you that this is probably one of the most spectacular amenities in any project here in Boca Raton. It also has a jacuzzi, and it has a weight room, and it has a TV room, and it's really wonderful. Again, if you're interested in this particular project, give us a call. 888-TALK-364. That's 888-TALK-364. This is the place to live.
At Cutia Mortgage Group in Boca Raton, Anthony and Susan Cutia and their 25-member professional staff take the time to educate you about your mortgage options. They believe a properly structured mortgage should be the cornerstone of any wealth creation strategy.
Anthony and Susan suggested that I use the option arm. This gave me the flexibility to make decisions in terms of the mortgage payment that I was going to do at the end of the month.
I'm grateful to the Cutia Mortgage Group for opening my eyes to different mortgage vehicles, which has enabled me to lower my debt ratio and increase my cash flow.
Tune into our radio show, Talk About Mortgages, or catch us on PAX TV Sunday mornings at 10. Call the Cutia Mortgage Group toll-free at 888-TALK-364 or log on to our website, talkaboutmortgages.com, and receive a free newsletter or credit repair kit. Make an informed mortgage decision when purchasing your own home, commercial or investment property. Cutia Mortgage Group, revealing the path to ultimate wealth creation.
Welcome back to talk about mortgages, real estate, and asset protection. We're joined this afternoon by Bill Carey. Bill is a CFP with Wealth Preservation Group. And if you have a question and you'd like to talk with him, you can certainly reach him right here in the studio, run a question by him, or if you'd like to dial up our office at 888-TALK-364. That's 888-TALK-364.
You know, Bill, we were talking before about asset protection, but let's talk a little bit about some of the programs, and I want to make some comparisons. Let's assume that a person had $600,000 property. And, you know, I get this question all the time. People say to me, well, what do I do with the money? If I take the money out of my property, where can I put it? How can I ensure that it's safe and that I'm going to get enough of a return in order to make my debt service payments? I said, well, there are various vehicles that you can use. Most important, the objective is to release that equity into a liquid asset as opposed to an illiquid asset, or into an entity or a vehicle that can give you a return on investment. And I'd like to talk a little bit about that, because if we have 600,000, typically what we can do in a situation like that is do a mortgage of $450,000. And if we were going to use the option arm program, which we do in most instances, especially in circumstances where we're looking to, you know, work with a financial planner, that would be a payment of roughly $1,652. So let's kind of put that in our mind, keep that aside for a second. If we have a payment of $1,652, now this particular payment cannot go any higher than 7.5% of the payment in any year during the first 5 years. So let's also keep that aside. We now have $450,000, and let's assume we have $10,000 in closing costs, just to make it simple. So we net $440,000. Now, there are a number of things that people can do depending on their risk tolerance, depending on what their attitudes might be. Some people might say, well, I want to take some of this money and I want to buy some real estate. Some people might say, look, I don't want to buy real estate. All I want to do is take this money and invest it in something to give me a return. I kind of think you can almost have your cake and eat it too. So let's kind of explore this a little bit.
Okay.
Let's assume we split this up. We took $240,000, and again, we can move these numbers around to really accommodate the individual. Now, I did this with the customer about 3 years ago, where I had a financial planner, actually a financial planner that we work with, and we had a client that did about $800,000, and they put about $400,000 into an annuity, which was giving them a guaranteed return, and then they took the other $300,000 or $400,000 and put it into bonds. Now, we all know what bonds have done in the last 3 years. They did exceedingly well. They could not have done any better in any other vehicle than what they did. In other words, the combination of what they were able to, to accomplish. So, if we were to take now this example, the $240,000, and let's kind of work with this number. What are some of the thoughts that you would have in these types of vehicles, or in vehicles that might be available?
Well, certainly annuities, especially these days, people have a love-hate relationship with annuities and insurance, or actually insurance companies.
Mm-hmm.
But annuities provide so many different benefits besides just the interest rate these days, the tax deferral, the creditor proof, as we talked about, bypassing probate in the event of death and different things like this. But one of the things that the insurance companies are very, very good for, and that's guarantees.
Mm-hmm.
They've always been good for that. When you need to insure your home, you go to an insurance company. You don't go to a bank or a stock brokerage firm. When you need to insure your life or your home, that's where you go, an insurance company. They provide that. So they've got these guarantees. They've been very creative also. The last 2 years, I have seen that one of the good things that have come out of what we've seen the last 2.5 years is that the insurance companies have become very, very creative. They come out with some tremendous products that that would be available to put some of these funds in. And there's different types of them. There's what they call fixed annuities, which are those people that don't want anything to do with the market. It's a fixed rate of return. Normally you have a floor of 3%, but that's for the life of the contract. Even if it goes out 100 years, you got a 3% guarantee.
Right.
They used to be 4.
Mm-hmm.
And I think you can still find some 4s out there, but mostly about 3%. Now they credit an interest rate normally above that. Then you have variable annuities, and they're like mutual funds in a sense, where they can go up and they can go down as well. And we all know what's happened there in the last 2.5 years. So what the insurance industry now has created is something called an equity index. It's for people that want the best of both worlds. I need guarantees, but you know what? If that market comes back, I'd like to come back with it a little bit too.
Mm-hmm.
And that's what the equity index does. It has a guarantee and it has
Right.
a cap on what you can return if the market comes back, as you can select tied to different indexes. So
Right.
it's a pretty unique product. So
That's, by the way, the type of an annuity that Susan and I have. We have an equity index annuity. But go ahead.
you're
All
high
right.
tech. You got the best one
High
out
tech.
there, I think.
Okay. All right.
But and then there's also what they call immediate income annuities. And we
Mhm.
were briefly discussing that before the show, and that is where you take a certain amount of money, you put it with an insurance company, and then what they do is they give you the income for life.
Right.
Those became unpopular because people didn't want to lose access to principal, but they're coming back in style, and one of the reasons is something called an exclusion ratio, which means that if you do annuitize a contract, and if all you're looking for is an income for as long as you live, you may provide more benefit in your pocket because the tax breaks that the IRS gives people that annuitize are tremendous.
Mhm.
If I put $100,000 in, it grows to $200,000. I start taking monthly payments. Normally, out of anything that's tax deferred, you're going to be ordinary income taxes. Under these circumstances, only 50% comes back to you taxable. The other 50% that we're going to assume is your principal coming
Principal
back.
return on capital, right?
So-
Return of capital, I should say.
And that might be,
Mhm.
and that might be something that might be used as well. Of course, all those are creditor protected, but the guarantees, and like I say, besides even just the interest rates, it's all the other benefits that come with these kind of products that make
Right.
it very unique as an alternative.
Well, let's use this example. And I wanted to make the comparison between this and a reverse mortgage. And taking the same example, and I went on a couple of websites and I kind of did some calculators and looked at the comparisons between the two. And there are 3 programs that are offered in reverse mortgages. One is by FHA, the other is by Fannie Mae, called the Home Keeper. The other is by what they call Financial Freedom. And these 3 examples and just to kind of lay it out a little bit, a home value of $600,000. Under the FHA program, you'd be able to take a lump sum of $94,000. Under the Fannie Mae program, you'd be able to take a lump sum of $105,000. Under the Financial Freedom program, you can take a lump sum of $150,000.
It's important to note that the example is based on an individual whom I believe is 63 years of age.
Actually, it's 72.
72?
72, and that's what we're going to get into
Okay.
that discussion. So the individual is 72 years old. Now, in order to do a reverse mortgage, by the way, you have to be above, I think it's 62 years of age, okay? So now, in addition to that, you can take, or I should say, you can either take the lump sum or you can take an income. Now, with the FHA program, you can take $579 a month. And the Fannie Mae, you can take $834. And the Financial Freedom program, you cannot take out any. It's either all or none. So you have to take the lump sum program, or you can take what they call a credit line. Now, why would somebody take a credit line with them is beyond my comprehension. But in this particular instance, if we were to do our example and take the $450,000 and take $240,000 and put that into some type of an annuity vehicle, off the top of your head, and of course, circumstances change with individuals, but what are some of the programs that you can think of that might be better than something like this?
Well, like I say, you've got a floor on the annuities, as far as the interest rates are concerned.
Payment, not necessarily interest rate. I'm talking about payment. Because, see, we want to compare apples with apples.
Mhm.
Under the reverse mortgage program, what's happening is you're, in essence, surrendering your property for the monthly payment.
Right.
Now, in other words, as you take this monthly payment out, it's being added to your mortgage. And as a result of that, more and more of the equity is being used in order to make the payment. So in essence, what you're doing is it's a principal reduction. You are taking principal from or equity from your property and getting really very little or no return on that money. You're just getting the monthly payment, which sounds a little odd to me, but I find it strange why. It's just a financing vehicle is what it comes down. By the way, this is not free. You still have to pay for this. You still have to pay fees in order to achieve the same thing.
Mhm.
So now let's take the example where we took the 240 and we just wanted to do a single pay annuity so that we compare apples with apples here.
Okay. Well, if you took the entire amount and put it into an annuity, one of the things the annuities do have is a kind of a liquidity feature, they call it. The majority of them have this, and they allow you to take a certain percent out each year without any back-end charges. Normally that is around 10%.
Right.
So you could take out up to 10%.
Now, my understanding is the older the person, the more you can take out?
Well, it all depends. If you're getting into if it's a qualified, this would not be qualified, that's correct. But no, it's normally a 10%.
Normally 10%.
10%.
Okay. So in that particular instance, if you put in 240,000, and we can, manipulate the number depending on how much we want, but if we have 440,000, we can take out $44,000, or you can take out, if you split it up, you can take out 24,000 and still have $200,000 that you can invest in anything else, and some kind of a savings account or other type of vehicle, or maybe even real estate. And even if you got a 3% return on that, that's another $6,000 a year. So between the two, you would be able to generate $30,000. Now remember, it's costing you $1,652 a month to service this debt, so it's costing you $19,800 in order to do this. So the bottom line is that you wind up with about $10,000 or more if you were just doing it this way. But the big advantage is you have $200,000 cash in your pocket that you can do whatever you want to do with. If you took the entire $440,000 and you got $44,000 a year, now you're $24,000 ahead positive cash flow by using this kind of a method as opposed to using the reverse mortgage program. And you still have use of your property. See, with the reverse mortgage, you still lock up your property. You can't do any second mortgages, you can't do anything
Well, you base
else with
this
the
on
property.
80% loan to value. So
75%.
75. So you're still sitting with 25% equity in the property.
That's correct.
And the home can still continue to appreciate. Now, what happens to an individual if they choose to take the money out, let's say in a lump sum, the $440,000, and they don't wish to make any distributions annually? They could expect that would grow at a rate of 3% annually?
At least 3%, that's correct.
Okay, the 3% is the floor.
Right. Normally the floor in most companies is 3%.
Okay.
That's what we're seeing across the board. And we're still getting, I just saw annuity the other day with some company, and they were guaranteeing a 5% rate of return for 10 years.
Now, do some programs also have a bonus?
Yes, they do.
Okay, so in other words, if a person invested $440,000, what are some of the bonuses that they have?
I saw a bonus just this morning, Anthony. It was 10.24%. It came out with the floor as well as the bonus. The interest rate the first year came out to about 10.24.
Okay, so in other words, 10% on the first year, in essence, if you put in $400,000, you actually now have $440,000. You now increased your investment to 480 some odd thousand, and the 3% return is calculated on the 480?
Yes.
Okay, so in other words, the 3%, so in other words, if a person took out the 480,000, got a 3% return for the next 10 years, that's $647,000. So, that's a significant guaranteed return because of the 10% bonus.
That's correct.
Now, if do they have to ever give back that 10%?
No, they do not.
They don't.
Well, I've seen certain contracts in the past that said if you ever surrendered that contract during what they call the surrender period, that they had the option, they had the right, I should say, to recapture that bonus. And normally you don't see that today.
Really?
So
okay.
that bonus is yours.
Okay. Okay.
Makes it
Okay.
even more attractive.
Yes.
We're going
Right.
to take a little break. When we come back, we're going to take maybe perhaps some of your questions. We'd love to take your questions. And we're going to talk a little bit more about real estate and how that can work, certainly
I'm
to
going to
increase.
show how you can actually combine this with real estate.
Exactly. We'd love to take your questions. Great time to dial us up. We're joined by Bill Carey, a CFP.
At Cutia Mortgage Group in Boca Raton, Anthony and Susan Cutia and their 25-member professional staff take the time to educate you about your mortgage options. They believe a properly structured mortgage should be the cornerstone of any wealth creation strategy.
Anthony and Susan suggested that I use the option arm. This gave me the flexibility to make decisions in terms of the mortgage payment that I was going to do at the end of the month.
I'm grateful to the Cutia Mortgage Group for opening my eyes to different mortgage vehicles, which has enabled me to lower my debt ratio and increase my cash flow.
Tune into our radio show, Talk About Mortgages, or catch us on PAX TV Sunday mornings at 10. Call the Cutia Mortgage Group toll-free at 888-TALK-364 or log on to our website, talkaboutmortgages.com, and receive a free newsletter or credit repair kit. Make an informed mortgage decision when purchasing your own home, commercial or investment property. Cutia Mortgage Group, revealing the path to ultimate wealth creation.
It's not about the children who dream too much. It's about the 1 in 6 children who want just enough. Just enough food to stop the hunger. Just enough medicine to make the sickness go away. Just enough home to be safe and warm. Just enough to let a kid be a kid. Because right now in America, 1 out of every 6 children is living in a state of poverty. And that's just 1 child too many.
Hi, this is Anthony Cutia again, and we're here in unit number 205 at Palmetto Place. One of the features of this particular unit is this tremendous deck and the sliding glass doors. Every room here has one of the sliding glass doors, has a floor-to-ceiling sliding glass door, and it's really a tremendous feature. So if you're interested in this particular unit, you should call us, 888-TALK-364. That's 888-TALK-364. We're going to go inside and we're going to look at some of these individual units, and we're going to look at the kitchen area. We're here inside Unit 205 again at Palmetto Place, one of the premier addresses in Boca Raton. And we're in the kitchen area right now. And as you can see, we have the black granite tile on all of the countertops, and we have the stainless steel sinks. We have this upgraded kitchen and the appliances. And you'll see that we have, these are all the gold package, the Whirlpool gold package. Very, very nice. This particular unit is for rent right now. It's a 2-bedroom, 2-bath unit, and this unit is for rent right now at $2,550 a month. So if you're interested, call us in our office at 888-TALK-364. That's 888-TALK-364. Okay, we're in one of the bathrooms at Palmetto Place, in one of the 2-bedroom units. This particular bathroom has the Saturnia tile and has the tile countertops as well. All right, we're in one of the bedrooms at Palmetto Place, and as you can see, you have the tremendous closets, these very large closets, and these units that have carpeted flooring, and you can see that very, very nice carpeting in these particular units. If you're interested, just give us a call in our office at 888-TALK-364. That's 888-TALK-364. And this unit is for rent for $2,550. Anthony Cutia again, and we're here on the pool deck of Palmetto Place. What a beautiful pool deck this is. You can picture yourself just lounging around, just taking in the sun, just a tremendous area. I must tell you that this is probably one of the most spectacular amenities in any project here in Boca Raton. It also has a jacuzzi, and it has a weight room, and it has a TV room, and it's really wonderful. Again, if you're interested in this particular project, give us a call. 888-TALK-364. That's 888-TALK-364. This is the place to live.
At Cutia Mortgage Group in Boca Raton, Anthony and Susan Cutia and their 25-member professional staff take the time to educate you about your mortgage options. They believe a properly structured mortgage should be the cornerstone of any wealth creation strategy.
Anthony and Susan suggested that I use the option arm. This gave me the flexibility to make decisions in terms of the mortgage payment that I was going to do at the end of the month.
I'm grateful to the Cutia Mortgage Group for opening my eyes to different mortgage vehicles, which has enabled me to lower my debt ratio and increase my cash flow.
Tune into our radio show, Talk About Mortgages, or catch us on PAX TV Sunday mornings at 10. Call the Cutia Mortgage Group toll-free at 888-TALK-364 or log on to our website, talkaboutmortgages.com, and receive a free newsletter or credit repair kit. Make an informed mortgage decision when purchasing your own home, commercial or investment property. Cutia Mortgage Group, revealing the path to ultimate wealth creation.
Welcome back to talk about mortgages, real estate, and today, asset preservation. Right now, we have a caller. We have Jeff on the line.
Hi, Jeff. How are you?
Pretty good. How about yourself?
Very well, thank you.
Good. Listening to your show, it's very interesting what you're saying, and it makes a whole lot of sense. But a few questions that I always have when people come out with different plans to help you increase your fortune is what's the worst case scenario? You know, like what's the highest my interest rate could be on say your option arm? You know, because you used a $1,600 debt payment, but you're gaining approximately $2,000 a month on the setup that you gave. But if the option arm goes up, then my debt payment's going to go up. Correct?
That's true, and that's an excellent question. And obviously, you also have to impute in that a couple of things. You have to impute the fact that you have an interest deduction on that money. You also have to impute the fact that you're paying that money back with cheaper and cheaper dollars because of inflation, whatever inflation might be. But the fact is, in this particular mortgage instrument, and I was actually going to go into that discussion on this segment, the interest rates right now have been coming down rather consistently. As a matter of fact, today, the 10-year note was down 16 basis points. It was extremely strong today. So and what's happening is this particular mortgage instrument is tied into the one-year Treasury note averaged over a 12-month period of time, and it's called the 12-month Treasury average. Right now, that index is at 1.64%, and if someone were to do this program right now, they'd actually be paying roughly 4.39% as the actual interest rate. See, we use 1.95 as what we call the minimum payment, but the actual interest rate is calculated using the index of 1.64, which is what it is today, plus 2.75 margin, and that comes out to 4.39%, I believe. Okay. So to answer your question, you cannot make the assumption, number one, that interest rates will just go up indiscriminately. They can also go sideways, or they can also continue to go down. However, there are some safeguards in this. The safeguards are that the interest rate and the pay rate, I should say, 1.95% or the $1,600 a month, that payment cannot go any higher than 7.5% of the payment in any year during the first 5 years. So even if it were to increase during that period of time, you would still be ahead of the curve. You'd still be making more money if you were in this type of situation. Now, you sound like a young fellow. You don't sound like you're 72. Maybe I'm wrong.
Correct. No, you're correct.
Okay. So
Never too early to plan.
that's exactly what this is all about. In other words, what you really need to do is to start to plan, because if you don't plan, then when the time comes about, then you're not in a position to take advantage of, of some of the programs that are available today, which are quite unique. Now, you might be in a better position. You might be in a position that it might not be best for you to make this single payment into an annuity. It might be better for you to put the money into a different type of a program. And tell me, Bill, give me a little idea what a person, how old are you, Jeff, by the way?
33.
Okay, you're 33. Let's talk a little bit about, what some of the other programs that a person can go into.
Well, if you're looking just for interest rates, I mean, right now we're doing a lot of work, obviously, in short-term bond funds and different things like this that'll hopefully generate and are generating anywhere, from as low as 1% to I've seen as high as 6.5%, 7% on a short-term bonds. As you know, we would not certainly recommend any client get into intermediate or long-term bonds at this point.
Right.
With interest rates the way they are, but short-term bond funds are certainly an area. Other insurance products as well are if an individual has a need for any life insurance programs have changed dramatically in the last few years, and for an accumulation standpoint, can be very attractive, especially if we have a younger person that has a family and has a need for life insurance itself.
Right.
Because it grows just like a tax deferred, just like an annuity, but when you take the money out, it can be structured, if structured properly, it can come out tax-free, unlike the annuity. So it's kind of attractive in that respect. But annuities right now, the insurance contracts themselves in general, short-term bond funds, beyond that, of course, you get into mutual funds and stocks, and that's certainly not a place that I don't think we'd be advising people to get into at this point with that money from the mortgages.
Well, it all depends, obviously, on their risk tolerance and what they're looking to do. But, I mean, that kind of gives you an idea, Jeff. I mean, what we also talk about investing in real estate as well. And,
that was exactly. I was thinking of investment property myself.
Right. And one of the things that I was going to discuss at this point was, if a person were to take a property, and let's assume a person had $100,000 of equity in their home, and they took the $100,000 out and they bought a property, and this is a little simplistic, but the concept is basic and sound. And let's assume you got a return of 8%, which is kind of reasonable. That's not unreasonable in today's market. Anywhere from 6 to 12% return. So let's assume an 8% return, which would be $8,000. One of the things that you can do is you can take this cash flow and do a couple of things with it. One thing, obviously, you can take it and set up a sinking fund or a reserve account, because that money is tax sheltered. So you're not going to pay tax on that money because of the depreciation of the property itself. So you're earning $8,000 a year, whatever the number is. It's irrelevant. But now let's assume you took the same $8,000 and you put it into an annuity. What could we expect there, Bill, if someone were to take, that $8,000 or $600 a month or $500 a month, whatever it might be, and put it into a monthly annuity, like an index fund or something like that? Now you kind of have the best of all worlds, I think.
Absolutely. You've got the growth with tax deferral, and plus all the other things that we discussed, the avoiding probate and the creditor proofing. And you've got, if you variable annuities allow you to select index funds or mutual funds or bonds or stocks, or not stocks, but actual what they call sub-accounts. Just about anything you want to do in that respect. And of course, the equity index annuity itself is a great thing, because you've got some guarantee, but you've got market returns as well.
And like I was saying before, this is something that Susan and I do on a monthly basis. We do exactly this. I mean, this is a plan which we have started, or we've been using for years now, and this is a program that we believe is, very effective, and we put it into an index annuity. As a matter of fact, we get a kick out of it every month. We look at it. My wife looks at it all the time. She says, "Look at this and what's happening here."
I'm the numbers person in our family.
She's the numbers person, right? So, but that's the approach, Jeff, in what we're looking at to achieve here, and that's developing a plan. I mean, most people will, fail to plan, and at your age, you have one big advantage: you have time. And there's
I agree 100%. I'm actually calling and asking these questions for my parents who did not plan properly, and I'm trying to find a safe, quality place for them to invest their money so they can live out the rest of their lives comfortably and not have to worry about anything.
Right.
And so that's why I was calling and trying to find out about the worst case scenario and just the option arm that you were talking about. You're saying the payment can go up 7% and you're guaranteed at 3% on the bottom end. I'd have to actually put in the numbers to see if that would even out or if they would actually still be making a profit on it.
Well, actually, they would be making a profit on it because you have to remember that, and again, one would have to determine what their age is and other factors as well.
Right. This is all just hypothetical right now.
How much is the property? Do they currently own a home that you're thinking about doing something like this on their home?
I'm actually thinking about buying a home for them and then transferring it to their name, and then they'll have that position. I don't know if that would work properly or not. Either way, I mean, it would be in their name, and they could be set up through them with the annuity and everything else, and it would all be legal.
Well, the thing to do, Jeff, quite frankly, is to give us a call. Let's sit down with some financial people. Maybe we sit down with an accountant, an attorney, and this way you can, you really get the best of all worlds. You really get the right kind of advice as opposed to doing it helter-skelter and piecemeal, because you really need to surround yourself with the disciplines so that you can determine what is in the best interest of your parents. And this way you don't, make a mistake or you avoid making a mistake.
You have all your questions answered at the same time, and that's very important.
Correct. Yeah, I understand what you're saying. It's just, I listen to a lot of different financial shows on the AM station, and, out of all of them, you guys make a lot of sense as far as you're not trying to give everybody the absolute best scenario all the time. You're giving everybody middle of the road and letting them know the downside. So that's why I called you guys to begin with, because I appreciate the honesty that you put out.
Well, I appreciate that. That's very kind of you. And that's what we try to do. You need to know what you're getting involved in, and you need to understand that. Once you understand it, then it's easy to make, the right kind of decision.
Exactly.
All right. Well, Jeff, thanks so much. I appreciate the call. Give us a call in the office at 888-TALK-364.
Talk 364?
Right. 888-TALK-364.
Thank you.
Okay.
We still have time to take a couple more questions. So if you have a question related to real estate or real estate investment, or a question concerning your assets, you can call us right here. Our guest this afternoon is Bill Carey. Bill is a CFP with Wealth Preservation Group, and we look forward to taking your questions. We're going to take a little break. We'll be back in just a minute. It's a great time to dial us up.
At Cutia Mortgage Group in Boca Raton, Anthony and Susan Cutia and their 25-member professional staff take the time to educate you about your mortgage options. They believe a properly structured mortgage should be the cornerstone of any wealth creation strategy.
Anthony and Susan suggested that I use the option arm. This gave me the flexibility to make decisions in terms of the mortgage payment that I was going to do at the end of the month.
I'm grateful to the Cutia Mortgage Group for opening my eyes to different mortgage vehicles, which has enabled me to lower my debt ratio and increase my cash flow.
Tune into our radio show, Talk About Mortgages, or catch us on PAX TV Sunday mornings at 10. Call the Cutia Mortgage Group toll-free at 888-TALK-364 or log on to our website, talkaboutmortgages.com, and receive a free newsletter or credit repair kit. Make an informed mortgage decision when purchasing your own home, commercial or investment property. Cutia Mortgage Group, revealing the path to ultimate wealth creation.
Don't leave them hopeless. Shelter the homeless.
Mayors and city commissioners of Palm Beach County, the Catholic student community will not forget about the homeless children in Palm Beach County.
Don't leave them hopeless. Shelter the homeless. Don't leave them hopeless. Shelter the homeless. Don't leave them hopeless. Shelter the homeless. Don't leave them hopeless. Shelter the homeless.
Welcome back to Talk About Mortgages and Real Estate. I just want to remind all of you that you can log on to our website, talkaboutmortgages.com. If you'd like to send us an email, certainly we love to take your questions, your comments on the show, topics that you might like to hear more about. As well, you can also apply at talkaboutmortgages.com. We do have a secure site. You can fill out an application and get a jump start on the pre-approval process. But for those of you that are interested in receiving our foreclosure list, I want to remind you that all you have to do is log on to talkaboutrealestate.com and you can provide us with your email address, and we can send you our foreclosure list. Now, this is a very timely list. We receive it 24 hours prior to publication in the newspaper, and we'd like to be able to send it to you. However, some of you that are on AOL or Yahoo, your mail keeps bouncing back to us, and we think it may be associated with their objective to try to reduce spam.
Their servers.
So if you have an additional email address, or if you have been on our list and you are in the last week have not been receiving the foreclosure list, then please just call our office. Perhaps a work email address might work better for you. But email is the only way that we can send the list out